Have you been wondering if you should be using other people's money, where the interest rates are going to be in 2023, what type of real estate to invest, and how the markets are going to look?
In today's video, we're going to discuss all these things in addition to the top 10 real estate questions that investors are asking us in 2023. Hey guys, Josh Ehren from the Findlay Mortgage team. Today's video we're going to talk about top 10 things you should ask your mortgage broker in 2023. We're going to go over everything from fixed to variable terms all the way to should I buy right now, should I not buy right now, and what strategies to look at when purchasing real estate in 2023.
Are interest rates ever going to stop increasing?
What a great question.
My heart hurts.
That's a really good question. Yes, of course. One day they will stop increasing. Currently, right now, the climate is obviously changing, and it's been pretty volatile over the last 6 to 12 months. The Bank of Canada essentially has come out and said that they plan to try to at least stabilize the market this year. We don't expect interest rates to decrease, but at least variable rates not to decrease. But we are seeing some sort of stabilization in the market, and we're expecting the majority of the pain that variable mortgage rate holders are having right now to subside or at least stabilize out over 2023.
Yeah, we've seen some of the fixed rates. I mean, they've moved pretty consistently up and down over the last couple of years. You got to remember that your variable and your fixed rates are based off of two different markets. Fixed, you're based off the bond markets, and your variables are based off of Bank of Canada Prime. So taking a look at those indicators, but we're expecting variable probably to stay pretty consistent throughout 2023. Fixed rates are going to fluctuate a little bit, and then hopefully everything should be down coming into 2024.
What do you think the Bank of Canada will do next?
So I think, after raising rates in January, it's a tough look forward for the Fed. Obviously, the questions are, what are we really trying to do with the interest rates? Are we trying to fix, the housing market, which kind of seems to be, the rhetoric around it, or the other option is, are we, implementing these longer-term increased rates and having a more global impact on the economy? Obviously, we've seen, pretty much everyone start to tap into all of their lines of credits and their savings coming in. Into February 2023, most lenders are now just starting to see some delinquencies and some arrears on mortgage payments. So we know that people have been basically clearing out all their liquid savings, maybe tapping into those lines of credits and credit cards now. So it'd be hard to think that they were going to continue to keep these rates up and kind of crush people with these rates. Bank of Canada lost money for the first time at the end of 2022 as well too. So that's not really a storyline that they're going to want to continue. So it's hard to believe they're going to continue to increase their rates, but when exactly they're going to start to bring them down, pretty hard to say.
Yeah, I completely agree. I think that there's a lot of pain happening in the market right now. Raising interest rates essentially is the Fed, the Bank of Canada, trying to stop the movement of money. In the most layman's term possible, they are trying to stop people moving money and trying to stop all the excess froth of capital that was printed in the economy. And it's working. Mortgage payments are going up. Debt is at all-time highs. All these variable rates, your car payments, your student loans, your credit cards, your lines of credit, your house. People are starting to really feel that pain now, and I think it's very much slowing the economy. It's ground the real estate market to essentially a halt in a lot of areas. I think that what they have done has definitely played out exactly how they wanted to play it out, but they can't keep it up for too much longer. I expect that there to be consistency with the rates going forward, but I don't foresee a whole lot of upward pressure on variable mortgage rates in 2023.
How will Canadians afford housing in the rest of 2023?
That's a great question. If you guys are watching this video, we're going to release another video on OSFI's new proposed regulations, and this actually might have a huge impact on what's going to happen with people purchasing real estate in 2023. Homeowners right now, you're caught between like a double-edged sword. So, at the end of 2022, you had extremely high prices but dirt cheap rates. Nobody wanted to buy a house because prices were too high. Now you have suppressed prices but high rates. I think that people who are going to start buying houses, or first-time home buyers, or people who are looking to buy a home, it's probably a good idea if you can get into a home, buy it at a lower cost point, because your rate is going to change throughout the term of owning that asset. So you might be buying at a high rate right now, but at the end of your term, you might be stabilizing out and buying and getting a lower rate on your mortgage. So I'd say that if you are looking to get into a mortgage right now and you can afford it, take advantage of the lower prices.
Yeah, and I think, taking a look at some other creative ways, house hacking, I think, it's been talked about for a while, but I think, with the interest rates the way they are and the housing market the way that it is right now with the prices, there isn't a better time to look at trying to, get into an owner-occupied duplex, triplex, fourplex, have some of the other tenants help pay towards your mortgage. I think we might even see some families maybe starting to split duplexes or stuff like that, being able to split some side-by-sides or up-downs. I think we're going to start to see some more creative living situations just to help negate some of the debt and some of the cost of home ownership.
Yeah, I think that is definitely a theme in other parts of the world. Europe has 100-year mortgages, and the affordability in those assets is so difficult that we are seeing families live together for longer, and that theme, I think, is going to continue to emerge in Canada, and especially Ontario, just where prices are at and the affordability in homes.
Should I take a fixed or a variable rate mortgage?
The million-dollar question, fixed or variable rate mortgages, that is completely dependent on your specific situation. Currently, right now, we are in this weird time in history where variable rates are actually higher than fixed rates. Specifically because, as Ehren said earlier in this video, they're based off two different metrics. The fixed rate's based off the bond market, and variable rates based off Canada's Bank of Canada overnight lending rate. Essentially, that affects prime affects your mortgage payment. It's really dependent on your strategy and what you're looking to do. Currently, right now, a lot of people who are looking to get into a home are taking a shorter fixed term because the payment's lower, and we're expecting some sort of downward pressure on rates within the next 12 to 24 months. So our advice to a lot of our clients who are looking to purchase assets right now is take a shorter fixed term because of the price point and where we expect the economy to go. Variable, if you are going to take it, you're taking a variable if you need to restructure your debt, you're taking a variable at the top of an interest rate hike cycle. So if you do expect to, let's say, do a BRRRR and you think you can dial in your ARV value, taking that variable rate, we don't see a whole lot more upward pressure on the rates.
Yeah, I have seen some clients start to take variables coming into the end of 2022 and start of 2023. The properties that they have been taking the variables on aren't necessarily properties they plan on turning over really quickly. Like one was a cottage. They had like a 3-year plan on that one, and that was exactly what he said. I think we're at the top. This was in December, so he was expecting 1 or 2 more raises, but he was comfortable with rate increases, and for him long term over the next 3 to 4 years, it made more sense just to be able to potentially ride those rates down. So yeah, it really depends on what your goals are moving forwards. Could depend too, like what type of lender that you're in. Are you with an A lender, or are you on the alternate side? Because on the alternate side, fixed rates just tend to be one of the better options at a 1 or a 2 year, depending on your project size. So it really depends on your goals, and it's a good question to sit down and just kind of discuss with your broker and take a look at the whole situation.
Yeah, there's a lot more to do with strategy than it does with the actual rate itself, because if you're looking at making that decision right now, that decision right now impacts throughout the entire term, which is very much like a 12, 24, 60-month term. Understanding the implications and possibly what's going to happen moving forward in the economy. Now, we, as brokers, we try our best to be able to look at past data to understand what's going to happen in the future, but nothing is 100%, and right now we live in a weird world where things are happening that we haven't seen before, but it's good to be able to forward look and think about those decisions before you start making them.
How are real estate investors transacting in this current market? Are transactions up? Are they down? What's going on?
It's been an interesting transition coming from the end of 2022 to 2023. For us, since we deal primarily with the investors' business, it's the volume of transactions has definitely, we've seen a decrease. There still are investors transacting. Right now it's really about, do the numbers work? And for the deals that are too good to pass up, we're still seeing people jump on those opportunities, and we're still seeing people buy. We are still seeing some investors successfully transitioning out of BRRRRs. It may not be the 100% BRRRRs that we were seeing over the last year and a half, but they still are getting some of their money back. So that's going to be just an idea that you have to kind of keep in your mind moving forward. Is what is your idea of success? Success used to be 100%. Success now may be a 60% or an 80% burst. So we kind of have to readjust our expectations a little bit. But due diligence is high. Running the numbers, stress testing the numbers, especially on the commercial side. We saw at the start of 2022, we were underwriting rates at 3.5. Those rates jumped up, almost doubled. So we putting a little bit more emphasis on trying to plan ahead and stress testing a little bit more now, just kind of what happened in the past. But transactions are still happening and people still are making moves.
I completely agree. I'm also finding that seasoned investors are very quickly looking at changing their strategy. What doesn't work with single family homes anymore works with multifamily property. And I think understanding the fundamentals and doing research because the market no longer works is pushing a lot of people to that multifamily space. We're seeing more definitive as complete values. The ability to be able to dial in a cap rate is pretty consistent with just talking to a really good appraiser, and that's allowing people to be able to continue to purchase or continue to do projects in a market where we're seeing drastic declines in residential housing prices. So I'm starting to see a lot of my clients, at the end of 2022 move into the multifamily space. If you can't afford it by yourself because it takes more capital and more expertise, maybe we're seeing 1 or 2 or 3 of these more sophisticated investors coming together and pooling their capital to be able to continue to do projects because the demand for real estate hasn't changed, and these types of assets are still, solid assets if you can purchase at the right price and you have enough capital to be able to do the project effectively. There's still deals to be had out there. People are still transacting. It's just the ones who may be over leveraged aren't doing it anymore, and the ones who are savvy and who are liquid are continuing to purchase real estate.
When do you think interest rates will drop?
When are they going to drop? It's tough to say specifically, obviously. There's a lot of factors that go into that. I think it's safe to say that a variable rate, I wouldn't expect variable rates to really go down throughout the course of 2023. I think it's going to be more just a year of stability, just trying to figure out and price out the market, and kind of just seeing how the economy recovers in the short term of this next year. So variable rates, I think safe to say plan on keeping these rates pretty similar to the end and going into 2024. The fixed rates, they've been changing quite a bit. I think we touched on this on the previous question, but they've been going up and down. Some of the alternative lenders just dropped some of their 3-year rates on the fixed rates, but I think we might see the fixed rates come down a little bit throughout the course of the year, which is going to be good for some investors, especially if it's these short-term rates, these 1 to 3-year fixed rates. So that might help some of the movement in the market. But again, I think 2023 is going to be a bit of a stability year, kind of like a transition year. Variable rates going to stay the same, and we're going to see some fluctuations with the fixed rates.
Where do you think real estate investment is headed in 2023?
The great thing about real estate investors is that they buy up markets, down markets, and sideways markets. There's always a way to make money, and the majority of people who make serious money buy in down markets. So we are seeing a huge amount of people on the sidelines looking for really good deals, and I don't think that's going to change anytime soon. The savvy investors became liquid halfway through last year. They're sitting on capital, whether they have it in some sort of bond or some sort of very liquid asset to be able to make a move. We expect to see people who are ready and who are professionals continue to transact and look for really good deals. I think it's going to happen probably halfway through next year when you start to see more inventory on the market and there's a little bit more pressure on people to sell because of the situations that they're in, unfortunately. Previous to the last question, essentially, I foresee a lot of people moving into the multifamily space. Affordability is really hard with your personal debt servicing. Your income isn't really rising to the point where you can offset the actual personal interest rates. So, buying a single family home doesn't work anymore for cash flow. Buying a duplex can be really hard because you don't make enough money. So we're starting to see the transition into commercial financing because you don't necessarily need that GDS-TDS ratio to qualify, and that's going to be a consistent emerging theme, and it's going to continue to, I think that's where the Canadian real estate market is going to go eventually completely for real estate investing. If you guys watch our video on the new OSFI rules, we're going to touch on this a little bit about some of the regulations that might be coming into effect that are going to drastically affect the ability for somebody to purchase a rental property. And if that's the case, then how you transact moving forward and the type of real estate you're buying is going to drastically change as well. So, I think that 2023 is going to be the year of the investor if you're a savvy one and you can make a ton of money.
Should I buy real estate now or wait for values to reduce?
Yeah, again, I think, like we mentioned in terms of the second to last question, I think it was, if the deals make sense right now and you have the money in it and the numbers work out, there's no reason for you not to commit to a deal and go in and close on it. I think I've seen some investors coming to the end of 2022, the start of 2023. They were just kind of looking at everything and just trying to get into something. And I think with the shift of the market and like Josh just mentioned, with a lot of people, they're probably going to have to be trying to get out of the homes they own. Unfortunately, it doesn't make sense to pressure a deal and to kind of force your way through. If the ROI on the deal and your equity takeout isn't quite there, there's going to be a lot of properties coming to the market, unfortunately, or fortunately, but. Don't force yourself into a deal. Wait for the deals that make sense, because there's going to be a lot of them. And like Josh said, like coming out of this down market, it's going to be an opportunity for investors to make a lot of money. And the last thing you want to do is kind of make a decision that hampers yourself moving forwards, and you get stuck in a bad asset.
I completely agree. I think there's a few other mortgage agents who have come out and said that essentially, like, they also expect, based off of conversations with RBC and CIBC and where the projections are going, we do expect some more downward pressure in the market. So if you don't have a situation where you're getting a really deep discount on a property right now, you don't have to buy. So expect a little bit more downward pressure, but always remember that you're also not the only one waiting. There are a ton of people who are waiting to get a good deal as well, and the second that sentiment changes, you're also going to be one of 15 other people who are putting a bid on a property. So don't try to catch a falling knife. If you found a good deal and there isn't a ton of people putting offers on them, I'd say take advantage of it, or at least try to get that good deal. If you buy it and then the market shifts 1 or 2%, at least you can get a deal, instead of having to fight with 10 or 15 people or investors who are looking to take on a deal when investor sentiment changes.
Should I still be using other people's money?
Yeah, it's a good question. It really depends on the type of deal that you're looking to get into. Depends on your ability to get in and execute 100% on your plan as well too. The biggest thing that we've seen are the BRRRR projects. We're not getting the 100% BRRRRs anymore. So you have to be comfortable with the fact that you may not be getting any equity out of the deal. You may be just paying back your investors, and you're left with your asset. Hopefully it's cash flowing, or you're looking at a situation where you're buying the equity in that property moving forwards. You also kind of have to take a look at the type of deal that you're getting yourself into and what that means for your financing. The majority of the time when you're borrowing other people's money on prom notes, it means you're looking at some sort of private type financing. Is that something that you can handle with the rates? Again, are you going to be able to execute your project in the timeline? You don't want to be stuck renewing in a private mortgage. So talking to your broker and understanding all the the pros and cons of using other people's money, and just making sure that it fits your project and your comfortability.
Completely agree. In 2023, we saw OPM kind of implode. Especially when rates go up and people start getting squeezed, the access to other people's money becomes limited. So, are we seeing people use OPM? Yes. Usually investors who are seasoned, who have multiple projects on the go, who have a track record of completing projects on time, but obviously carrying costs is a real thing. It was a lot easier to borrow other people's money and do projects when you had a 3% rate. Now that you have a 6% rate or a 7% rate on the B side, if you can't make those payments, you can't factor those that debt servicing into the profit in your project, maybe it makes sense to have just a larger equity position. All these gurus out there saying borrow other people's money, buy real estate with it. There's something to be said about using your own capital as well and not being over leveraged in a market that it has volatility in it. So just keep that in mind. Most people who do have their own capital in a project weren't over leveraged and aren't getting squeezed right now. So it's something to just keep in mind.
Should I be investing in commercial or residential real estate right now?
Yeah, it's a good question. We've seen a fair amount of our investors transition from residential real estate into these 5 to 12 unit buildings. That seems to be the most popular entry point. And then we've also seen some of our more experienced investors, start to move away from that 5 to 12 and go into some of these larger buildings. Seeing a lot of stuff out of province. Saskatchewan's popular, Alberta, out east as well too. I think some of the benefits of residential real estate have kind of diminished with the rise in purchase prices, and especially with the rise in interest rates. Even with market rents starting to increase, it's just not quite enough to keep these buildings, cash flowing and really producing a positive cash flow per month. I think, moving forwards with residential real estate, I think the main kind of idea behind that is going to be building that nest egg of equity for down the road. You're buying these properties, you're going to have the renters in there, they're going to offset some of your costs, or you're kind of buying your equity, and then in 10, 15 years, whatever it is, you can sell off your portfolio and recoup that equity. But I think the idea of buying residential for cash flow is kind of gone. You might still get your good deals in secondary markets that are able to cash flow, but in the primary markets, I think prices are just too high. The benefit of the commercial real estate is that to get a commercial loan, it has to be able to cash flow. Your debt servicing at 1.2, 1.25. The lender's not giving you a loan if you're not making money, positive cash flow per month on that deal. So your positive cash flow is always baked in with the commercial structuring. But the way the rents are increasing in immigration, that's only going to push these commercial buildings to a higher value down the road as well too. So on the commercial side, if you can afford it, you kind of get a little bit of both. You're getting that cash flow per month, and you're also going to expect a nice equity increase in your property over the next 10, 15 years.
And there you have it, guys. There's the top 10 questions from real estate investors for 2023. We had an absolute pleasure shooting this today. If you guys have any other questions or anything on your mind, feel free to either drop it in the comment section below or give us a shout. We're always available to chat, whether it's on Instagram, over the phone, shoot us an email. As we progress through 2023, there's going to be a lot of questions about the market changing and interest rates changing. And each individual person who's watching has a very unique situation, and we specialize in unique and difficult, challenging mortgage files. So if you have any questions, again, reach out. We really appreciate you watching.